Good morning, everybody. Welcome into the show. Okie dokie, we got a lot of stuff going on. Well, especially with the Fed. There's really not that much stuff going on. Let's be real. I started to go through the news this morning. I'm like, what is going on here? I got like 4 stories that I could talk about, and then everything else is something. Okay, let me make a comment here about this music situation because everybody wants it, including myself. But I just want to let everybody know why there's not a 15-minute buildup anymore. So to please the YouTube algorithm, this is a little housekeeping business. We need to have increased watch times. That means the average watch time for a video needs to be very high. And if I start playing music, somebody comes in at 8:45 and then they leave at 8:47, and it just brings our watch time down. Now, what happens when you bring the watch time down? That drops the average. What does YouTube do? They see that not as many people are watching your video or sticking with your video, so they don't promote it as much to everybody. So unfortunately, this is a catch-22. We need to keep watch times up. So unfortunately, this is what we have to do. I don't know what to say. You want to call the YouTube guy, the guy that runs YouTube or whatever it is. So, all right. Well, I'm glad everybody's here. Here we go. Let's see what we got. Is there a solution? Yeah. Tweet if you're allowed to tweet. If you haven't been banned from Twitter, tweet the CEO of Google and see what happens. Say do you want them to promote Everything Money Live, irregardless of average watch times. Okay. All right. Futures are down, which I am very happy about. Yesterday, let's talk about this rally that happened yesterday. So we're just sitting there waiting, and then the Fed comes out and speaks a little bit at 2:30, and boom, where the market just goes berserk. This is what everybody needs to understand about markets, especially in today's day and age. Markets love certainty, and markets love being correct. As you can see yesterday, everybody was expecting a half a point bump. That's what everything was saying. They got the half a point bump, and the stock market still rallied. And why am I saying that, and why am I pointing at you right now? Because they always say, it was already baked in. It was already baked in. Well, if it was already baked in, then the market reaction would have been basically flat. So it wasn't baked in because it went up 3% in a matter of 90 minutes. So don't tell me that things are baked in. I'm not an idiot. Well, I am an idiot in some ways, but not in that way. So, all right, let's see what we got going on today. Let's just start with the Fed. Fed lifts interest rates and will wind down $9 trillion bond stockpile in double-pronged attack as the U.S. attacks inflation. Okay, there's daddy right there. The Federal Reserve on Wednesday, if you live under a rock, raised key interest rates by half a point and reaffirmed more aggressive strategy to... I'm taking my shoes off. I hate wearing shoes. I hate wearing clothes, frankly. As part of the prolonged fight against inflation, the central bank also said it plans to whittle down its $9 trillion stockpile of treasury bonds and mortgage-backed securities starting on June 1st. And I think they're going to do $47.5 billion to start. We'll see. The central bank's benchmark right now for the Fed fund rate is 0.75 to 1% in what it expects to be a series of increases. And they say that they're going to get that up to about, 2.5, something like that. It's a second rate hike this year, the biggest since 2000. Powell also, and what happened in 2000.com. Powell also said further half-point rates increases are on the table for the upcoming meetings. The central bankers want to convince Americans that while they can't do much to alleviate this year's pricing pressures, they do want to alleviate those issues in the subsequent years. The Fed is aiming at 2.5 benchmark by the end of the year, and I think 3% by the end of 2023. Initially, the Fed plans to reduce its holdings. This is its balance sheet. This is the mortgage-backed securities and the treasury payments of $47.5 billion a month. After 3 months, the Fed will ramp it up to $95 billion, and I think they plan to get that down by the fall. Cost of living has jumped 8.5% in the past year. BS. Absolute BS. It has not jumped 8.5% in the last year. You want to talk about 8.5%? 8.5% is cost of living, not including food and gas and diesel and energy in general. So don't give me this cost of living has jumped 8.5% in the past year, because there's no doubt that every single person out there has to buy food, and more likely than not has to buy gas, unless you just have a totally solar house and you drive EVs. So basically, if you live in California. But if you don't do that, you're paying for it. So it's not 8.5%. That's a lie. That is an absolute lie. Businesses, and if you are the person that is struggling, you know that's a lie, because it's not 8.5%. Businesses were unable to cope with the sudden flood of, this is funny, the sudden flood of demand fueled by the government stimulus payments, because they couldn't obtain enough materials to produce all the goods and services. So basically they flooded people with cash, and then the businesses couldn't produce because of the supply chain shortages, so it just got all totally out of whack. So they screwed that up too. Okay. Here. So investors also believe that the Fed fund rate would they would raise it by 75 points in the June meeting. Let's come over here and listen to that.
Table. Take a listen to what he said earlier.
75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data.
So, okay. I still don't believe that 75 basis points is off the table, for the record. I still don't think that 75 basis points is off the table. Nice hair. Jerome Powell does have great hair. It just flows, baby. It just flows. But with that being said, guys, I don't think that 75 basis points is off the table. If inflation runs up to, I don't know, in the 10% range, 75 basis point hike is not off the table. And fake alias just said it. Let's be honest. Even though they said a 75 point hike is off the table, it's very likely that they could do it again. Absolutely. Absolutely, they can do it again. So, hey, that's everything that's going on with the Fed. I mean, let's see what happens from there. Let's talk about Elon Musk. Elon Musk, this guy is getting funding from everywhere. Oh my God. Musk secures over $7 billion in funding. I believe he needs $11 billion by the end of the month or something like that. I don't know. Elon has secured $7.14 billion from a group of investors, including Oracle, Larry Ellison's a good friend, and Sequoia Capital, his fund to fund his $44 billion takeover of what's going on. So here we go. Saudi Arabian investor Prince Al-Walid bin Talal, who had initially opposed the buyout, also agreed to a $1.89 billion stake in the deal rather than cashing out of his investment in Twitter. He is going to go to Jack Dorsey for that. Qatar Holding and Dubai-based Vi Capital is going to, they're an investor in the Boring Company, which is absolutely incredible. If you don't know anything about the Boring Company, go and look at the Boring Company. It's freaking awesome. Speaking of which, if anybody has a Boring Company flamethrower, tweet me. I need to know about this because I need it. I'll buy it from you. Larry Ellison, a board member at Tesla, self-described close friend of Elon Musk, has committed $1 billion to funding. So this is going to get very interesting. I really like where we're going with this. I really, really want that man to take over Twitter. Here is a perfect example of why you don't trade earnings. I'm going to pull up Shopify real quick on a chart. I just want to show you guys what's going on here. All right, so Shopify closed yesterday at $485.49, opened the day at $415. Well, that's where it's going to open today. So where was that Shopify story? Here it is. Misses. Okay, here we go. Shopify dropped as much as 16%. For the record, that's over 80%. That's over 80% in the last year that Shopify has dropped. They have announced the largest acquisition in its history, $2.1 billion deal for some startup called Deliverr. I don't know what that is, but nor do I really care, to be honest with you. Revenue for Shopify rose 22%, but missed analyst expectations. So this is why you don't trade earnings. They have declined 65% as of the close yesterday. And this morning, it's down over 15%. There you go. 80% for those of you that struggle with arithmetic. Wayfair reports mounting losses, CFO departure, and retail law. Look at this. So here, okay, I pull up this story because I want to kind of segue into a different story that I didn't pull up. I want everybody to pay attention to Lowe's and Home Depot over the next quarter. Lowe's and Home Depot are real companies that you need to pay attention to because those are the leaders. They're the big box stores. They're the big leaders of this home renovation stuff. Where are people spending? Do people still have this disposable income to go and do projects and stuff that you don't need to do? That's the key here. Stuff that you don't need to do around your house, are you doing that? So is the disposable income out there? I don't want people, you don't need to pay attention to Costco. You don't need to pay attention to Walmart because they have products that people actually need on a regular basis. Everybody needs on a regular basis. Yes, I understand contractors and stuff go because they need it, but you can tell where the bump comes from as far as going to Lowe's and Home Depot. So I want everybody to pay attention to Lowe's and Home Depot over the next quarter and run it from there and see but this is a perfect, because Wayfair is in a very similar situation to the rest of them. So let's see what Wayfair is doing. Wayfair, shoppers have scaled back their spending in the home category. So this is where it starts. So this is, now people are stopping decorating their homes, okay? This is what a lot of Wayfair sells is decoration, furniture, etc. if you don't know. What are people going to be doing as far as construction and actually physically doing things in their home? That's something that I need to pay attention to for the next quarter. I think that's going to give you some kind of tip on where things are going in the economy. Shoppers are still very interested in the home category. Of course, Wayfair reported that its count of active users declined 23.4% from a year ago. Now remember, they got a big COVID jump. So 23.4% to me is a big number, but it's not that big of a number because I would want to know what their decline is from 2019 levels. That's what I want to know. Does this decline just mean that they're back to the standard quo that they were at pre-pandemic? Orders totaled 1.87. I don't know what that means. 1.87 what? Orders per customer. Read a little bit. Orders per customer 1.87 versus 1.98. Again, COVID. That doesn't seem like a lot to me. Maybe it is in the space. Wayfair reported a loss of $319 million versus a net income of $18 million a year earlier. So shares fell almost 14%. Net revenue in the United States dropped 9.9%. International revenue dropped 31.4%. I wish somebody would compare this with 2019 levels because I don't think it's fair to compare it to COVID. Of course, you're not sitting in your home anymore. What the hell do you think you're going to do? You have to actually go to work. Well, some people have to go to work. You actually have to go to work and do something. Yeah, you're not going to be able to just decorate your home anymore. So minus 9.9% of American customers, does that just take us back to 2019 levels? And is it above 2019 levels? Take out the anomaly, like we always say. Take out the anomaly situations, which COVID was. That's the biggest anomaly you can get for home decoration. And then go from there. So, hey. All right, Facebook plans to reduce its hiring as revenue growth slows and inflation concerns. This is an interesting story. I'm not really sure where to go from here. We regularly, I look at this saying, okay, they regularly reevaluate things. Maybe it's okay. Maybe it's not. I don't know. I guess I have to dig a little bit deeper in here. We regularly reevaluate our talent pipeline according to our business needs in light of expenses and guidance given for an earnings period. We are slowing its growth accordingly. However, we will still continue to grow our workforce to ensure the long-term impact. So if you actually read into the story, look what they're reducing. They are going to start reducing their Just wait. Just wait. There's something very important that I should have highlighted in the story, but I didn't. Meta intends to stop or slow hiring for most mid-level or senior level roles, those that take the more income. So, to me, the fact that they're still growing their workforce this doesn't bother me at all. Maybe they don't want too many cooks in the kitchen at the mid and upper levels, which is a wonderful thing. We experienced a further deceleration in growth following the start of the Ukraine war. Basically, they can't advertise in Europe anymore, and it has taken a big hit to their business. Again, anomaly situation, will get fixed. There you go. Let's go and see what markets are doing. Let me hit refresh here. I would really like to know. I hope they're down 1%. Almost 1% on the NASDAQ. Yippee, 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 yahoo. 10 years almost up to 3%. Okay, any inversions going on? No inversions going on. So today's a big reporting day for the disruptors. Lucid, Square, Space Galactic, Nikola. I wonder if Nikola is going to roll a truck down a hill again for old time's sake. The greatest biotech company in the history of the world, Ocugen, reports tomorrow before the bell. So get your oven mitts ready for that. That'll be super exciting. I mean, Ocugen is just a company that is just on the verge of I mean, I can't even tell you how good Ocugen is. From a price of $800 to $2.50, that is impressive to do in a matter of 7 years. That is freaking impressive. So, all right, let's get through. Let's hit some of your comments and go from here. I'm going to scroll all the way to the top, and let's go here. Hey Mo, is shorting out of touch now? Well, if you don't want to make money, it is. I just watched a video of Jim Cramer saying he likes to be called Jimmy Chill. What a douche. Is there a solution? Let's see. I've got trends. Mo, can you trade me? Mo, where's the video of your shoulder pressing in the intro? Again, I already explained this. Okay, Elon needs to buy the stock market. That would be pretty. If Elon said he was going to buy the stock market might melt because they'd be like, oh my God, Elon's going to try to buy the stock market. Yeah. Anyone pissed about how positive Powell was? They were wrong. Listen, all they're trying to do is just control markets. They're going to tell you we don't care about what the stock market does. They care about what the stock market does. Trust me, they care about what the stock market does. Mo, what face wash do you use? Not a pimple in sight, dude. My face protocol is absurd. So yeah, it's absurd. I use a lot of stuff, but it works. Mo will be stripping down clothes to improve average watch times. That's actually a pretty good idea. Maybe we can get the music back for 15 minutes if I just do a striptease for the first 15 minutes. Happy Cinco de Mayo, El Capitan. Gracias, senor. REITs are looking good. Yeah, pay attention to REITs. Mo, I work in trucking. We raised our fuel surcharge 40% because diesel is $6.50 a gallon. Jeez, oh man. Goodness gracious. What is going on? Let's be honest. Even though they said, 75 basis points off the table. Elon Musk, the least evil billionaire. Elon Musk is absolutely incredible. Could you ever imagine that the richest man in the world would be the biggest troll in the world? Could anybody ever imagine that? I absolutely love it. I absolutely love it. We'll be seeing a lot of Mo tweets in the future. I did get a Twitter. I signed up for Twitter, so good luck. Hamas has better tunnels than the Boring Company. Probably. Is minus 80% a lot? I refuse to be Wayfair because of their annoying commercials. I don't watch TV, so I don't know about their commercials. Elon should adopt me. Hey, whatever you like. Let's see. Construction costs are through the roof. Construction costs are absolutely through the roof. I was going to build a new home, and then I started fixing in construction costs. And if I was going to build a home, it was going to be 30 to 40% more than I wanted to pay, more than my budget was, just because of costs. So I decided not to. Facebook is a reminder of your aunt's birthday. Yeah, that's true. Can't wait for the huge numbers coming out of Lucid. Is BABA earnings tomorrow? I don't know when BABA earnings are, to be honest with you. And if I look and it tells me, it's probably not going to be correct. So what's Mo's Twitter? What is my Twitter? I'll have to look and tell you. ARC, guys, what do I do here? I lost. Can you help me? I bought it. I don't even. You're sarcasm. Good boy. What did Star Wars do yesterday? I don't know. Nerd. Just kidding. All right. What do we want to do? What do we want to look at first? Let's look at BABA and see when those earnings are. So It says that Baba's earnings are May 6th. Now, let me go to the interwebs and type in Baba earnings date. And let's see what they say. So they say May 12th. So it's all over the place. When it comes to Chinese companies reporting, it's all over the place. And this is from the NASDAQ. Yeah, so the NASDAQ says the 12th. I would assume it's going to be the 12th and not the 6th, but who knows? It just comes out of nowhere. Why does the market rally every time Powell speaks? Actually, it doesn't. Actually, the market my friend actually, he pulled out an Excel spreadsheet and he went through every single Powell speech and he averaged how much the market moves. And he found that it was like 82% of the time that Powell speaks, after a positive reaction from his note that comes out at 2 p.m., it goes negative when he starts talking. So the guy doesn't know how to communicate to markets. It's as simple as that. All right, let's see what we got next. Where's my mouse? Facebook. Let's just check Facebook while we're at this. So Facebook is going to open up here. Pretty good volume coming into the stock. Now the issue that I'm seeing is holy head and shoulders. Look at what that we have going on here. This is priming for a disaster. Not only that, let's get rid of the head and shoulders. So you got the head and shoulders. You see the head and shoulders there. Now look at this. You are starting an ugly face pattern too. So this is like an ugly face pattern accompanied with the head and shoulders. Here you had an ugly face pattern. And look what you got. Ugly face. Boom. Boom. Right down here to, almost 170. So this thing is going to come back down, especially when people digest the news and people start to get scared. If there's any Fed president that comes out and they love to run their mouths, you know what's different about this Fed versus old Feds? Put some chapstick on. The difference between this Fed and old Feds is old Feds never said anything. They shut up. They were very quiet. They didn't like to say things. They didn't like to tip anything off. I mean, in the Volcker days and the Ben Bernanke days, hell, even in the Janet Yellen days, Janet Yellen, she lived to run her mouth a little bit too, but she was pretty quiet. They were just quiet and didn't say anything, and you never knew what was going to happen. Now, these Fed presidents are out there nonstop running their mouth on CNBC, on Fox Business, on Bloomberg, and they're giving indications to which direction they're going to go. So that's why you have this is another piece of the cake that is all of this created volatility that comes out of the Fed. And if one Fed president comes out and says, maybe there's going to be a chance of a 75-point bump, even though Jerome Powell said there won't be, you better watch out because you're going to get some uncertainty and volatility in this market. I promise you that. Can you do Home Depot? Yeah, since I talked about it, let's do it. Home Depot was, okay, here, look again, guys. Look at this. And guys, I understand that this is Monday morning quarterback, but you can see this developing. I just showed you on Facebook what is developing right now. It is the perfect head and shoulders and ugly face pattern that is developing. This is it. You had an ugly face pattern develop up here. And what happened after the ugly face was completed? Boom, you got an incredible fall on Home Depot. I'm just going to go back to Facebook just to show you guys one more time. These patterns are extremely identifiable. We are seeing an increase right now. We are building the other side of that eye. We're building the second eye on the ugly face. We're building the second shoulder on the head and shoulders pattern. It is falling. You can see it happening in real time. So it's not just going back and saying, hey, look at this. Look at what happened back in March. No, you can see it happening in real time. You just have to become comfortable with charts and do it that way. So let's go back to Home Depot and hit it real quick. Just consolidating sideways in a channel, and I'm willing to bet if I just zoom out, we're going to see consolidation back in the, yep, so we're just consolidating in the same range. If this breaks this 300 level, you will return to pre-COVID levels. You will return to these pre-COVID levels, absolutely. And it looks like that's going to happen. I don't think I would swing trade this unless you get an engulfing candlestick today, but right now you're open at 310, so you're not going to get that today. You're not going to be able to get through that 50-day moving average with volume like this. You have barely touched average volume in the last 30 days. So, all right, sorry if you already answered this. Why didn't the Fed go for 75 points? Because the Fed is a bunch of crowd pleasers, and frankly, I don't think they have a very big interest in controlling inflation the way that they say they do. If they actually wanted to control inflation, they would be aggressively bumping rates. What they care more about is keeping markets at bay. That's what they care about. They're going to tell you all day that they don't care about what happens to markets. They care about markets. It's their biggest fixation. Markets are not the economy. And once people separate that and say markets are not the economy, because markets are not the economy, that's when you will have the correct interest rate hike to tame inflation. But everybody just says markets are the economy. I'm sorry, markets are not the economy. Markets are not the economy. Stock market is not the economy. They are two totally separate entities. But everybody just wants to control the stock market because that's what affects them on a daily basis, that they can physically see on their phone of their price moving up and down. So they think it's the economy. Sure, whatever. Okay. If all that being said, join the Bid and Ask Nation. Yeah, exactly. Whatever I said, join the Bid and Ask Nation. In an ETF, if an ETF brings 10% returns, is it smarter to buy BRKB instead? They take minimum 15% returns a year. Listen, if you want to look at Berkshire being a ETF, sure, go for it. You can look at it as an ETF. Absolutely. I don't know if that's right or wrong, but it just is. All right, gold is shooting up today. Yeah, because people are freaking scared. If you want to actually think about what's going on, people are scared. There is uncertainty out there. That half-point bump did nothing to tame inflation. So the uncertainty stays out there. The market moved because the market knew it was right. It's as simple as that. Mo, the turtle traders use to avoid continuously watching their overall account balance just to focus on individual trades. Do you do the same thing? Yeah, I never look at my balance. I don't care. I know this. I know I've been doing this for a very long time. I know I have never had a negative year. Hell, I don't know if there's been a year that I haven't beat the market. Doesn't matter. With that being said, I know where I'm going to end up at the end of the year. It's just a matter of how much. So what's the point of me being scared about checking my balances and saying, oh, I'm up this much per year? Who cares? I know where I'm going to be at the end of the year. So if I follow the rules, if I don't follow the rules, it ain't going to work out too well. It's as simple as that. Mo, what are your thoughts on student debt? Pay that off as fast as you possibly can. That is one of my biggest things. Pay it off as fast as you possibly can. Unfortunately, one of my best friend's fathers passed away, and pretty young, and he got a big chunk of money from selling his dad's house. And he said, what are you supposed to do? I said, dude, he's a pharmacist. I said, pay off those student loans. Just get rid of that debt. He said, what should I do? Start investing or to get rid of the loans? I said, get rid of the freaking loans. Get rid of the loans and move on. Get rid of the loans and move on. It's as simple as that. So that whole investing game is just trying to beat the market. That's what I do. I mean, what other game are you trying to play? Just beat the market. All right. As a new politician, you will now be able to beat the market. Yeah, so the good thing about me holding public office right now is that I have a direct line to Nancy Pelosi, and I can ask her exactly what trades to make, and I'll instantly make 80% just like that. All right. What other stocks do you guys want to see? Let's look at Lowe's just because it's doing the same thing. This is exactly the same thing. You know, Lowe's and Home Depot run together. So if you want to look at either one, look at this. Instead of running through the 50, remember Home Depot was up here trying to get through the 50? This is trying to get through the 25. We'll see if it can do it. This is going to open up today. Let's see if you get an engulfing candlestick today and it runs right into 50 just like Home Depot is. So let's just see what happens. It's going to stay in this consolidation channel. I'm willing to bet if I zoom out and where's COVID? Was this COVID? No, COVID was back here. Wow. Okay. So Lowe's is doing a little bit better than Home Depot, to be honest with you. So pay attention to Lowe's. Pay attention to Lowe's. Why is everybody asking me to do Sleep Number? That's a great sales point for the bid and ask. Why does everybody want Sleep Number? All right. CWH. Is this Camping Warehouse or Camping World? All right. So Camping World, this has been a good trade for the bid and ask previous time. So now let me show you something. This is something that I have learned from trading Camping World multiple times, and I'm going to blow it up from a swing trading perspective. Can you say blow it up on YouTube? When you get earnings, often what happens with earnings is this. You get earnings, you get a big surge in volume, and then you get a fall. Again, earnings, big surge in volume, fall. And this is what you're getting. Big surge in volume, expect the fall. So what I'm saying with this is be very careful trying to swing trade this, moving up to that 100-day moving average. I would not bet on it. You usually get 1, 2 days. Where it is again? Here we go. 1, 2 days. This is what you get. 1, 2 days of rally and then a pullback. This is something that you can learn from looking at the same stocks over and over and over. And I look at Camping World a lot. So be very conscientious of here. This is a perfect example of why I say just throw 15 stocks on your watch list and watch the same 15 stocks over and over and over and over and just trade those 15 stocks. Stock market's now open. That is exactly something that you can benefit from. All right. What moving resistance do you use? What? Okay, she deleted it. What moving resistance do you use to confirm resistance? Is it usually 50? I don't understand your question. Electrical supplier said the demand is going to be high, but the prices will normalize over time. Gucci stores are going to start accepting crypto. That doesn't surprise me. So happy I never had a ton of student loans. Yeah, you're right. Thankfully, I have no debt. I'm 90% cash, 10% equities. Any suggestions? Brad, if you're the normal person out there, I would start putting that money every month into ETFs. Every month into ETFs, just start funding some ETFs and get your cash deployed. Unless you're in a very good financial situation, have like $10+ million, you got to get that money deployed because you are losing time. You need time on your side. You need compounding on your side. Get that money deployed. I'm not saying deploy it all at once. If you have $100,000, maybe take 10 months, $10,000 a month, put it into the S&P and just let it run. That's it. All right. Okay, so I am doing day trading at 10. I'll be on at 10:15. I'll be on at 10:15 for day trading. All right, let's see what Garmin is. Isn't there a ticker symbol like lost or something? Oh, no. Okay, never mind. That was wrong. It should be lost. Wow. That is a big run. So Garmin, come on. Where's the volume? Where's the volume? Populate volume. Populate. Ugh. You know, TradingView is an extremely frustrating program. There's the volume. So we're getting this declining volume. So be careful with that. Again, earnings happen. You're getting that deceleration in volume. You're running into these moving averages. I don't think that I would do anything with that. I don't think I would do anything with that right now. All right. What else do we have? What is it? Sleep Number replaced Hibbett as the worst performer in my little book. Congratulations. We'll move. Oh, we already answered that one. How does Hood look? I can already tell you it's terrible. I'm probably 10% savings, 90% invested. I love it. Do you own any I bonds? No, I don't. I don't have student loans. I work at the same time, but I managed it hard. That's awesome. HON. So let's do HON. People have been asking me about HON. Honeywell is on my watch list. So those of you that are not in the Bid and Ask Nation, why aren't you? But you should be. But anyways, Honeywell is on my watch list, and everybody sees that. So little inside baseball there. So you are reaching, this is going to be a very strong resistance point, and it makes sense, 2090 moving average. So I'm going to probably remove this from my watch list. There's not a whole lot of room to run right here. I think volume will probably slow down. We're kind of getting to that overbought area that it can roll over. So let's see. Mo, do you have T-bills? Yes, I have T-bills. I'm in 90-day treasuries. Can you do meth? I don't do meth. I have other drugs of choice, not meth. Meth is not one of them. CLF for swing trade long. For the record, I don't do drugs. I've never done drugs. I've never even smoked a cigarette. All right. Let's see. Head and shoulders pattern developing on CLF. I would not be surprised to see this thing come down here in this probably $20 range. As soon as it breaks the 100 and 200-day moving average, you're already seeing slowing volume after a big influx of selling volume. Big downtrend going on. So there's that. Okay. What else do we have? My coworker says Cinco de Mayo. He's a known idiot here. Well, thanks for sharing. I like that. Oxy. All right, I'll do two more stocks. I'm going to do Oxy and then... Okay, so here's the deal with Oxy. You're approaching all-time highs. You have a doji right now. You better pay attention to volume. You have earnings coming up. I'm telling you right now, this run of stock price has been pretty lame because you haven't really gotten volume, but you've gotten an explosion up to all-time highs. Why have you gotten that explosion? It's pretty simple. Warren Buffett. So let that run down and go from there. All right, I read Buffett is selling all of his Verizon stock. Yeah. Oh, yeah. See, Mo does Oxy, confirmed. Yeah, so I prefer Oxy to meth. Speaking of drugs, let's type in meth. Is it meth? There's no ticker symbol of meth. Oh, no, there's not. Somebody just said meth. Do you think the U.S. ETF will continuously grow 10% on average in the next 20 years despite slower growth? Yes, absolutely. Absolutely. LABD, I don't trade it overnight. I don't do 3-time levered ETFs overnight. All right, last stock I'm going to do is Amazon. Amazon. So Amazon has been absolutely beat down. The gap will likely fill if the market continues to rally. This is one of the new MAGA stocks. For those of you that have not heard the new acronym, FANGs, dead. Facebook, Apple, Netflix, Google, Netflix, RIP, Facebook, RIP. Insert Microsoft, Apple, Google, Amazon. You're welcome. All right. Let's see what's going on here. Consolidating in this consolidation channel. Big downtrend that's happening right now. Good volume coming in after earnings. I would bet on this to fill this gap. I would pay attention to this thing. I'm not saying take a tracker share on this because it's like 30. What? This is $2,500 stock? Wow. Guys, this thing was $3,700 $3,800 just in September. Wow. I'm actually pretty dumbfounded right now. I'm not going to lie. Wow. Okay. So $24.40 for Amazon. This just shows you how often I check stocks, check stock prices. They don't even register in my brain. I don't care what, honestly, I don't care what stock prices are from a trading or value perspective until I need to know that I'm in the realm of buying them and how much I can buy. Wow. Okay. So this gap, if the market continues to go higher, this gap will fill. Absolutely. Because this is going to be it's going to continue to be one of the leaders of the market. And you notice we're down the NASDAQ. Let's pull up the NASDAQ. Let's pull up the QQQ. Look at the NASDAQ. This came from 408 to 323. Look at that fall, okay? Pay attention to that fall. Pay attention to our trend right here, all right? Watch this. Amazon. Look at that fall. Look at our trend. The trend is exactly the same. Guys, these FANG stocks, Facebook, Amazon, Apple, Netflix, Google, Microsoft, have been responsible for the market flossing for the past 8 to 10 years. They have led the market up. They're going to be the ones to lead the market down. And if this isn't proof, this is exact. Look at this. This company went from $3,800 to $2,400. The trend is exactly the same. Pull up the QQQ. This is the NASDAQ, and it does the exact same trend, exact same fall in the exact same time period. Mic drop. I'm out of here. Talk to you tomorrow. Peace.